Hey, good morning, everyone. My name is Jeanmonod, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in about a minute and a half, but I definitely wanted to welcome you all to the webinar and thank you for taking the time out. For those of you who've signed on early, I see it, Andy and Andrew. Thank you for logging on early. Unfortunately, there's no prize, but thank you for logging on early. And I'll introduce our co-hosts here in a little while once we get started. But thank you. Oscar, how you doing today?
I'm doing good. It's not a sunny day in Miami, but it looks like it in my camera.
Alina, how are you today?
Wonderful. Excited for this webinar.
Great. I see Gail joined us. I know Gail. Hi, Gail. She's here in Dallas. So thank you for joining us, Gail. It's been a long time since I've talked with you. I see Eddie's joined us, Adana. Thank you, guys. We really appreciate everyone joining us here. So we're going to get started. It's the top of the hour. We're going to get started here in about another minute. We still have a lot of people logging on. We have over 100 people joining us so far. Just as an FYI, this is going to be recorded, but I really strongly recommend you stay to the end. We've allocated an hour. We've done a few of these already. We've actually gone over time-wise a couple times, but we're going to try and respect everyone's time here. But it's really important you stay on to the end because we're going to share with you a lot of great marketing ideas. So, but we'll get started here in a few seconds. Just let some more people log in while I put on my highly intelligent glasses here. So, Michael's joined us. God, we've still got a lot of people joining us. So give us a couple more seconds here. All right, guys, it's a minute after the hour, so we're going to get started here. Again, for those of you who are still joining us, my name is Jeanmonod. I'm a Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Been with Angel Oak, it'll be 7 years this year, so we've seen the growth of the non-QM space over those 7 years. It's been remarkable. So, but before I get started, I want to introduce. Before I introduce our co-host, I really want to just let everyone know this is going to be recorded. So don't worry about having to take notes. We'll send this out tomorrow to everyone on this call. I want to tell you what this webinar is going to be about. It's not going to be about all the securitizations that Angel Oak has done, how we're the leader in the non-QM space, how we closed $3.3 billion in 2019. So we're really not going to talk about all the securitizations, all the vertical integration, and why working with our AEs across the country is in your best interest. So that's what this webinar is not about. This is about a deep product dive, really making you guys the experts. And you've all taken this time out of your day because you really know what's important and how much this business is going to continue to grow. And so thank you for joining us here. So, but I do want to introduce our co-host today. First is Alina Derzhay. She's in our Florida market. I have the honor of working with Alina day in, day out. Alina's been with Angel Oak for almost 3 years. Alina, please share some other great facts and figures that you want to share with our team here.
Well, as John said, I've been with the company for has been already 3 years. I was in the mortgage industry previously years ago and got out of it, went into something else and decided to come back. And I moved to Florida specifically for this position, and working with Angel Oak and John has been amazing. It's a great team behind you. One of the best perks to this job is getting the loans, finding the home for the loans that typically you guys would be turning them away or not even wanting to bother, and helping you grow that business, the referral partnership, and so forth. So I look forward to going over the products with you guys, answering any questions, and hopefully working together in the near future.
Great. Also with us today is Oscar Ungo. He's also out of Miami and part of our inside sales team. Oscar, please.
Hey everybody, my name's Oscar. I've been with the company for 3 years, and these calls are always exciting because, like John said, we're going to take a deep dive into the products. Thanks for everybody for taking time out of your day to to jump on the call, because at the end of this call, you should be confident enough to sell these programs to help your referral partners, your real estate partners, get more buyers and to send to you so that you can help requalify and scale your business this year.
Yeah, great points, Oscar. And both Alina and Oscar are really good producers here at Angel Oak. So, whether you're a loan officer working with them, you're in capable hands, or if you're working with any of our other, 60 to 70 reps across the country, you are definitely in capable hands here. So, a couple of things. Again, I want to thank everyone for joining us. It's really important. I just want to share a couple figures with everyone. And this is a very interactive webinar. So, we're going to have a lot of Q&A during the time. We're going to have Q&A when we get into specific programs. But I definitely want to share a couple of statistics with you. Everyone, we all know, loan officers have had a great year this year. And congratulations for all of you for even the last 3 to 4 years for that success you've had. But, it seems like every month, every company and every LO is breaking more and more records. So kudos to you guys. But, at the end of the year, as you're preparing your taxes and you're seeing what you made in 2020, you're going to be like, holy smoke. So I want to share with you a couple of statistics here. The Mortgage Bankers Association is saying refis are going to be down 46%. So I'm not trying to scare everyone on this call, but, if half your business was refis, then you're going to lose maybe 25 to 30% of your income if that was your model going forward. And the Mortgage Bankers Association also says that purchases are going to be up 9%. Well, predominantly all of our non-QM business, not predominantly, about 85 to 90% of our business is purchase business. So that's another thing we'll go into share and how it's important to work with a qualified non-QM lender, because we're really, and Oscar mentioned this earlier, we're really driven to service you, your borrower, and most importantly, your referral sources. So, so again, this is a very interactive, and we already have some questions coming in, and I'm going to answer the first one. What makes up a non-QM loan, and how is that different from QM? So, excuse me. We have to non-QM still has to satisfy the ability to repay, just as you do on the QM side. So we may use alternative documents, income documentation to show that ability to repay, but I just want to make sure everyone's aware of we still have to have the ability to repay. Restrictions like interest only, not allowed in the QM world. We allow interest only in the non-QM world. Also fees. In the QM world, you're capped at 3% fees. In the non-QM world, we can go up to 5%. And then debt to income is another key component. Usually in the QM world, usually in the QM world, it's a 43% DTI. Here in the non-QM world at Angel Oak, we're 40 debt to income on the front end and a 50% debt to income on the back end. So just wanted to share that with you. So great questions. We've got a great audience. We have almost 200 people on this call. So again, I really admire you taking the time out of your day to learn more about the non-QM world and to become a product expert. So without further ado, we're going to jump into our program. This is the Angel Oak Mortgage Solutions website. It's a very easy, intuitive website to use. We have our quick quote tool. We'll show you these tools at the end of towards the end of the presentation. But today, again, this is not about everything we've accomplished over the last 8 years. This is really about programs. So we're going to dive right into the programs. And Alina, if you can give us an overview. Before Alina goes into a high-level overview of bank statements, and believe me, we're going to dive deep into this because this is our most popular program. But we're going to take a short poll to find out if anyone has closed a non-QM loan, a bank statement non-QM loan in the last 12 months. So we're going to take a little bit of time to give us about another 5 seconds to get this poll. Oscar, I'll be seeing you guys next week down in Miami, so looking forward to that. Let's wrap up the poll, and let me see what I have here for results. Give me a minute here. Poll. Wow, This has been pretty consistent over the last few webinars we've done. 30% have closed a bank statement non-QM loan. Guys, that's why I'm sure almost 200 of you are on this call. So that means, wow, there's a huge opportunity. And this is our most popular program. So Alina, take it away.
Thank you, John. As John mentioned, this is one of our top programs here at Angel Oak. It probably consists of about 70% of our business total now. Minimum loan amount, I'll go into the details. The minimum loan amount here is $150,000. We can go up to $3 million, so this could be a jumbo. We have an option to allow your borrowers to either use 12 or 24 month bank statements, either personal or business. Keep in mind that if you're going to use the lower amount, 12 months versus 24, the rate's going to be a little bit higher. There's a 4-year seasoning on any housing event, foreclosure, short sale, BK, deed in lieu. Rates are, when you automatically price out any of your scenarios, going to be 30-year fixed, but you do have an option to do interest only as well. One of the requirements for the bank statement program is that your borrower has to be self-employed minimum of 2 years. If you go in a business bank statement route, your borrower has to own at least 50% of their business, and then we're going to adjust the income for you when we calculate it. We're going to get into more detail with that, but one of the great things about our program is that we do all the work for you, and we do all the income calculation for you as well. You could do a purchase, you could do cash out or rate and term on the program. You have an option to do owner-occ, second homes, or investment properties up to 4 units, guys. And also, one of the recent programs that we rolled out kind of go hand in hand with the bank statement program is the 1099 only, which will be an option to do either a 1 year or 2 year with year-to-date earnings. And the year-to-date earnings can be bank statements or a pay stub.
Yeah, great stuff. So we have a lot of great questions coming in, but I did want to say Jamie has a loan closing today with Oscar. So congratulations, Jamie. Congratulations, Oscar. That's great news. And Sean, yes, I'll be in Miami next week. So if you have plans for lunch, yes, I will take you to lunch. So all good. So great questions coming in. This is all for everyone on this call. So really, you know, if you've got scenarios out there, you have a lot of questions out there, and some of the first couple questions out here, Oscar, you know, what's the difference? It sounds like an easy question. What's the difference between 12 and 24 months of bank statements?
The difference is really an eighth in the rate. So we do offer that. We have the 24-month program. We offer the flexibility of collecting 12 months of statements. What I normally tell everybody is to collect the 24 months up front. Now with COVID, you may have had some businesses that did struggle, that may have had to shut down. So over a 24-month period, you'll have more income over the average of that time period. If we need to, for any reason, we can always cut it down to 12 months if it's necessary.
One thing I wanted to add, John, the importance mainly of getting the 24 months is if we're looking, and depending obviously on the type of the business, if you're looking at deposits, something that might be considered a regular deposit, but it's typical to the business, on the quarterly basis, every 6 months or so, that's hard to show to the underwriter with only 12 months. That's why it's better to collect the previous 12 months as well to show that history that it's typical to that type of business, so we can include that income in. So it's for your benefit to go ahead and get it versus having to go back and forth with the customer of requesting additional 24 months and then having to resubmit for income calculation again.
Yeah, that's a great point, Alina. That's why Alina and both Oscar know their stuff. Raj brings up a great point that what Alina brought up, that 1099 program. That 1099 is really great for you, specifically for your referral partners who are realtors. So, really think about that, that your referral source for that. So Raj, appreciate you bringing that up. Raj asked the question of, what's the methodology and for calculating the income on the business bank statements? Maybe Oscar, if you want to, what are we looking for? I think that's what Rod's really talking about. And Oscar, elaborate on the team of people that we have available that will do this on their behalf. If you want to dive into that.
Sure. Talk about doing loans in your sleep, like Alina said earlier. We make it as easy as possible. It's just a matter of collecting 24 months of statements, getting us the 1003 in the credit report. We have a full department of people that are going to calculate the deposits for you. And how we calculate business income, well, we're going to look at the total of either 12 or 24 months of qualifying deposits. We're going to average that out, and then we're going to deduct expenses. So I guess typical questions that I may get on what we deduct as expenses. Well, we have an expense ratio that we apply, and we have several. We can go down to 15%, and the expense ratio really does. There are three criteria for the expense ratio. So the first is how many locations does the business have? The second is how many employees do they have? And the third is what kind of inventory do they carry? All right. So we have a business questionnaire that also gets sent to you that you can share to your customer at the pre-qual stage that asks them what the expense ratio is as a percentage of their total expenses. If it's a real estate agent, for instance, that's someone who may qualify for 15%. But if it's a car dealer, they have higher inventory. They may be anywhere on the spectrum up to 70%.
Great examples. And again, you're working with two very outstanding AEs here. So, these are great questions. We have a lot more questions coming in. Alina, expand on the 1099. Are we just looking at 1099? And really a lot has to come with the time of the year we're at too. So if you don't mind elaborating on that.
So 1099 is one of our newest programs that were recently added. As John mentioned, it's a really great fit for realtor partners. You have an option to do either 1 year 1099 or 2 year 1099. We'll take an average of it, but you also do require to get a year-to-date earnings statement. And the year-to-date earnings statement can come in the form of a pay stub, as long as it states year-to-date, or you can use bank statements, which obviously you're in January, so that will be more of a pay stub, or you'll have to wait a couple of months to see what the income is like. And then again, we do the calculation for you. We have the worksheet. We'll plug in the 1099 income. We'll plug in the year-to-date earnings, and then it'll give you the monthly average that you can use for qualifications.
Thank you, Lynn. Hey, everyone, these are great questions. If we don't get to them all, we will have your local account executive reach out to you. Oscar, you got some fans on here. You're the bomb, and you always go above and beyond the call of duty. So that's from Chris. So Chris, we appreciate that. We always love feedback, and especially the positive feedback. So Oscar, another question we have on here is, how are we handling forbearances during this time, obviously with COVID and stuff like that? If you want to elaborate on that for us.
Well, they've got to come current, and then we need 3 on-time payments.
And again,
only
guys,
3 payments allowed to be missed. So if the borrower went into forbearance and had 4, 5, 6 payments that they did not make, even with 3 current payments, that's going to be an issue. I personally have not had the situation to request a secondary approval on it, so I don't know if they're more lenient towards that or not. But for guidelines, it's only allowed to have 3 forbearance payments plus 3 on-time payments.
Correct.
Yeah, so another example, a good question here. What about COVID and decline in income? Alina, do you want to, that would be a reason why we would probably only use 12 months, right?
Correct. So again, once you collect the 24 months, our worksheet is extremely detailed. It'll tell you the decline. So it might be easier to just subtract the previous year's income and just keep it at 12 months. We do look at declining income, even with COVID, as unfortunate as it is. We do look at those numbers. You can, if you get close to 35% or 35%, that's going to be an automatic no. But you have ways around it. Again, one is eliminating the older month statements, or even try the 1099 only program for somebody that has a decline in income or irregular deposits coming in.
Yeah, and that's why, your account executive is a critical resource for you. Like people have mentioned, both Alina and Oscar, how great of a job they do. That's their job. They are experts in non-QM, and they do a lot of deals every month. So they'll work with you. Someone else has asked about how can I get my hands on a worksheet? You really don't need it. We'll calculate that income for you. So don't worry about the worksheet. As Oscar mentioned earlier, just get us the 24 months up front, and we will do all the work for you. So,
John, if you don't mind me mentioning, if for the 70% of people that haven't done a bank statement loan yet, the turn times on really getting an answer and should be really quick on pre-approving your customer. Like I said, 24 months of statements, the 1003 and credit. Between any AE at this company, looking at the 1003 and credit report should take us less than 10 minutes, and we can do it with you on the phone. Within 24 hours, our department's going to calculate the income. And as long as the customer's responsive and they'll pick up the phone and answer the call and just fill in the questionnaire, we can have all that done within the day. So it should be really easy to pre-approve your customer.
Great point, Oscar. Great point. Some other great questions coming in. I want to keep this moving. So, what's the maximum LTV, Alina, we'll go to on bank statements?
And that's the great part. We'll go up to 90% LTV. The minimum credit score requirement is 660 for the program, which will now give you 85% LTV. We'll max that out. But for 90% LTV, you need a 740 plus score. And guys, there's no MI on our programs, which is the nice little saving grace for your customers.
Yeah, there's a lot of questions coming in about rates, and we're going to get to one of our great tools that you have access to that you don't even need to be an approved broker with us for. So, but you're talking ballpark rates, high fives for 90% with no MI. I've heard other A's talk about, well, ask your borrower to go to their CPA and ask them if they'll change the way they file their taxes versus using the bank statements and qualifying for a rate of around 6%, 5.99 on a one loan, no MI. So we're getting a lot of questions. Oscar, what's the difference between using personal bank statements and business bank statements? And can we use multiple accounts?
You can use multiple accounts on business bank statements if they have separate businesses. The main difference between personal and business bank statements, well, let's say one of them is the expense ratio. If your customer has a business account, but they pay themselves to the personal account, then we can use 100% of the deposits in the personal account. Aside from that, the difference is that one is a personal checking account that they may operate their business out of because they don't have a business checking account, and then the other is a business checking account.
I want to add to that. Oscar mentioned multiple businesses. We will allow only up to 2 businesses to use for the income calculation. And if that's the route you're choosing to go, you have to make sure you're using 2 business bank statements or 2 personal. You can't do 1 business, 1 personal. And also a very important part, whoever is on the personal bank statements must go on the loan. So keep that in mind, guys, because that sometimes can kill your deal. Great
addition there, Alina. There are a couple other questions. Guys, these questions are great. We really appreciate you. I mean, they're deep dive questions. So what about foreclosure, bankruptcies? Alina, what's the seasoning on those for this program?
It's 4 years. It's going to be 4 years for a bank statement program.
Hey, and do we just do purchases on bank statements?
You could do purchase, cash out, rate and term. Non-warrantable condos up to 4 units.
Great. Yeah. So guys, think about, the other thing is, one of the things I think about, if you're doing cash outs, a lot of these self-employed borrowers I'm seeing who are really thriving during this time might want to take some cash out of their houses and reinvest in their business. The other thing I love about cash outs is you're taking 3 other parties out of the equation: the seller, seller's agent, and the buyer's agent. So we do, as much as I said, we do a lot of purchase business, but we're starting to see a tick up in cash outs, and specifically in the January, February, and March timeframes. We see, I know my production used to have 30 to 40% of my production during the first quarter of the year was cash out refis. So think about that. So we'll get to a couple other questions, and then we'll move on to a couple of programs. We already answered the primary residence. Alina, what score? You might have mentioned this earlier, Alina. What credit score will we go down to, and what will the LTV be?
660. So we'll go down to 660, and they'll give you 85 LTV. 740 will max it out at 90% LTV, and again, no MI. And only 6 months reserves, guys, for the program. Unless if you're going over 85% LTV, if you're going to max it out 90, then the reserve requirement goes up to 12 months. But other than that, it's a flat 6 months.
Great. Guys, either one of you, Alina or Oscar, share a deal maybe you've just got done that was kind of unique and, because of your expertise and the great loan officer and the borrower you were working with, you were able to, get closed and funded.
Oscar, do you want to take that?
Sure. I mean, I can give a great example. I had a loan. It was 3 loans for one borrower. They wanted to cash out the maximum they could, up to $500K. They had their primary residence in 2 investment properties, and we were able to make that customer really happy, and they walked away with that money cash in hand. They also happened to have a Chapter 11 that was beyond already seasoned. But in the eyes of anybody who's never done a bank statement loan, that loan looks impossible. But to us, it's normal. It's just a really simple loan. So what I did want to say though is that you should not be scared to do bank statement loans. These loans, the average borrower on a bank statement loan has above a 700 score. The average LTV across the board is 75%. So these are people with great credit, money to put down, and typically the purchasing power is going to be a lot higher. So they're going to go look for that. They're going to look for properties with higher values. So I've done these webinars before with customers and other real estate agents on the call, and we're educating them. And there have been people who even testify to saying that they won two sides of a transaction, real estate agents that won two sides of the transaction by promoting a bank statement loan. So they were representing the buyer and the seller.
Great points, Oscar. And if you really look at it, I think there's projected to be 57 million self-employed borrowers by the middle of this year. So, when you think about that, and that's crazy. So, this is a huge, it's still, Oscar alluded to it. We did the poll. 70% of you have not done a bank statement loan. You're going to make a commitment to us that you're going to close a bank statement loan with us this year. I promise you. And we've seen, from our participants here, a lot of them have said they've worked with Alina, they've worked with Oscar, they've had great experiences. So let us help you close more loans and solidify those referral relationships. So we know there's other questions that haven't been answered. We'll get those answered for you as the webinar goes on and into tomorrow. So keep the questions coming, even if it's a bank statement loan question. We're going to still field those, and your AE will get back to you. So we're going to go on to our Platinum program. We're going to let Oscar share with you some high level, and then Alina and Oscar will answer some questions regarding Platinum, and then we'll continue to move on to other products. Take it away, Oscar.
Well, before I get into Platinum, I did want to leave one golden nugget on the bank statement loan program, and it ties directly into Platinum. The number one place where the customers that send me, or I'm sure many of us, the most non-QM business, that they go to get referrals for turndowns are the banks. So when this call is over, after we finish showing you exactly where you can go to customize your own flyers, if I were on the streets, I'd go straight to a business banker at a national regional bank and let them know that I have programs for some of their customers that they can't help them with, and just tell them that I'm going to give them some added value. The number one place for business bank statement referrals are business bankers. And then on our Platinum program, our Platinum Jumbo program, you may want to contact a private banker. You may want to contact a wealth manager, because there's a tremendous opportunity, especially now, for customers that aren't qualifying at Prime Jumbo because of how strict those requirements are being. So I guess I'll just take it away from there. The Platinum program, the main customer that qualifies on this program, that looks for this program, is typically a jumbo customer, like I said, that was turned down by a bank. It's amazing. I typically look at credit reports and I see how many places that they went to get pre-approved before getting pre-approved with Angel Oak. Some ways that our Platinum Jumbo program separates itself from Prime Jumbo right now: we have expanded DTI. We definitely have expanded LTV. We'll go up to 90% with no MI, just below $2 million on a bank statement loan. So that's on a jumbo full doc loan. So that's incredible, and bank statements as well. We'll go down to a 660 credit score. So we're taking it down to 660. We have less reserve requirements, down to 6 months of reserves. So we're just all around, we're just more flexible. And these loans aren't scary. We're looking at the same type of income that you would on any kind of conventional loan. So we're not going to underwrite it any differently.
Yeah, Oscar, that's a great point. And we'll always refer back to bank statements because we've kind of either forgot something or something. But, another question that came up for bank statements was, are we looking at tax returns? And obviously the question is no. And that's why you're coming to us, is because your borrower couldn't qualify using tax returns. So what's, Alina, a couple of things we get questions on a lot are, there are other jumbo. What differentiates Angel Oak Jumbo from, say, the Chases and the Wells Fargos of the world, if you want to say?
I would say the main difference will be the seasoning for a housing event. We're at 48 months. The DTI, we're at 40 over 50 with only 6 months reserves. Our cash out can meet the reserve requirement, and the 90% LTV.
Right. Yeah. So again, those are great points. This program, as Oscar said, we're going to talk to you a little bit more on how you can market yourself and where you should market yourself. So, but the average non-QM loan, I believe, is almost $375,000, and I know wherever you are participating in this webinar from, they're probably a lot larger in some of the areas that you live in. So, kudos to you and in that environment. So we can definitely help you with that loan. So it's just we're 30 minutes past the top of the hour. We want to definitely get into some more of our other programs. We're going to have Alina talk about our portfolio select. Let me move some things around here and talk about, hold on. Sorry, guys. Trying to do. Alina, if you can give us a high-level view. This is a little bit more popular on our Platinum, and this is really going to come into play, I think, a lot this year. So go ahead, Alina.
So Portfolio Select is, think of it as like more of a lower tier underneath the Platinum program. It's a great full doc program for your agency fallouts due to a housing event. 620 is going to be a minimum credit score requirement. We can go up to 85% LTV. Again, no MI. Minimum loan amount here is 125, and you still have an option to do a jumbo up to $2.5 million. But I was talking about the seasoning. We only have a 2-year seasoning for foreclosure, short sale, BK, deed in lieu, which is awesome. That's one of the lowest ones across all of our programs. You have an option to do purchase, cash out, right in term. Again, owner-occupied second homes and investment properties up to 4 units with non-warrantable condos. DTI here is 40 over 50. We do allow gift funds on the program here and also bank statements, as long as the borrower contributes 5% towards closing costs and reserves out of his or her funds. The rest of it can be gift. And you have an option to do a 40-year fixed interest only as well.
Yeah, so Thomas asked about thank you, Thomas, great question about, is the 40-year interest only available just for purchases, or is it also refis?
I'm sorry?
Is the 40-year interest only available just for purchases, or is it available for refis also?
It's for purchases, owner-occupied second homes only.
Okay, all right, great. Thank you. So Thomas, everyone keep the questions coming. Great questions. And Alina, obviously, this is full doc only, right? No bank statements for Portfolio Select?
Correct, no.
Right. Oscar, anything you want to add on this, or?
Sure. I mean, if you're getting we typically say if DU and LP say no, Angel Local say yes. If you're letting a borrower walk out of your office, that may not have fit into Fannie or Freddie neatly, and you didn't take 10 minutes to go on our quick quote and just print your 1003 and credit report to PDF format, that may be costing you a relationship if it was a client that was referred to you by a real estate agent. But moreover, I mean, it's just costing you money because, again, there's nothing different about how we're going to underwrite this loan. It's a really simple loan. We do have DTI requirements. Alina said them, 40-50, so we've got to make sure that the borrower qualifies with that respect, and that's really about it.
Yeah, and Oscar brought up something here I want to add to. This deal is going to get done. Whether you do it or you let them walk out, it's going to get done. I know Alina probably gets a lot of calls. I know I get probably 3 to 4 calls a week from borrowers directly. They've been told no so many times. In fact, last week, we had the highest traffic on our website. So, whether it's loan officers looking or borrowers looking to where they can get their deals done, this deal is going to get done. And as Oscar mentioned, you could be putting a referral source in jeopardy. So just remember that and call your AE. They're going to take you through the programs. They're going to take you through the process. Another thing is, there was a short pause back in March when COVID hit. We've had 21 enhancements since May 1st. So, use the website, but more importantly, reach out to your AE because they know they probably almost know before they're published the changes that are coming. So again, it's really, really important to rely on the expertise of your account executive. So we're going to move on to the next program, which is probably our second most popular program. But before we do, we're going to do a short poll, and we're really going to want to find out who has closed an investor cash flow program in the last, or what other people refer to as as a debt service coverage ratio program in the last 12 months. So let's put up the poll, and we'll give it about 10 seconds. Alina, Oscar, you guys are killing it today, man. Great, great scenarios, great answers, great dive into the programs. Our audience, thank you. You guys are asking some really, really deep questions. And if we don't get to them all, I apologize. We're trying to be respectful of the time, and we really got some great tools we want to show you near the end of the hour. So again, every question will get answered. Your account executive will reach out to you. So we appreciate all the questions. Keep them coming. I know we're going to have a ton regarding this next program. So let's take a look at the poll. So wow, 22% have closed a investor cash flow or debt service coverage program in the last year. That's pretty consistent with the previous webinars. So we've got almost an 80% opportunity out there. So for those 22%, kudos to you. Again, the other 80% or 78%, we're going to make it our commitment to help you close one of those loans this year. So we look forward to it. And, there's a lot of you still on the call, so we really, really appreciate it. Oscar, give us a high-level overview, and then we'll field some questions and get them answered for our audience.
Yeah, I mean, that number, that poll boggles my mind. I guess the question is, what slice of the pie does everybody want? This program is one of the easiest products, if not the easiest that we have, because it's the easiest 1003 that you're ever going to put together. Let me just start with asking a question. How many people have come across someone looking to purchase an investment property that, again, has great assets and great credit, but they either don't qualify with DTI because they're a savvy investor and take advantage of the tax code, or they just have more properties that are over the limit. We have no limit to the number of properties that they may have or that they have financed. So it's meant for investors who want to buy and hold property. It's not meant for those people that want to fix and flip. The loan program, like I said, it's DTI free. We're not looking at any income or employment whatsoever. You're not going to submit it to us during the pre-qualification. You're not going to submit it at underwriting. Qualifications based on property cash flow. There are two key things that you need to know. Your customer has to own a primary residence, and we want to make sure that they've had mortgage history for 24 months at a minimum. So how does the program work? I'm going to start with a purchase transaction, and I'm going to use the math. The math is so simple, a third grader can do it. Okay, it's just simple division. Rent divided by mortgage, right? PITI. So the way that it would work on a purchase, after that we've looked at LTV and if their credit works, then everything just relies on the appraiser's opinion of rent, the rent schedule. If that average market rent breaks even with the PITI, then we're good. Now let me move on to refi, a refi rate and term or cash out. The property must be rented, whether it be a single family residence or 4-unit property, every unit has to be rented. But what makes it really easy, especially on the refi side, and now more than ever, is that we can use the current lease. So if you already know what the rent is, all you need to do is go on our quick quote that we're going to show you later on, come up with the PITI, and again, if we break even or if we have positive cash flow, then you have a loan. Now, to make it even easier, because this program's only gotten better after COVID, at 70 LTV with a 700 score, there is no debt service coverage ratio, which is what the rent divided by the PITI equals. So 70 LTV, 700 score, you have a loan. What this really helps with, especially if we have people on this call out on the West Coast or in areas with higher property values, sometimes the DSCR may have some trouble working. So At 70 LTV with a 700 score, you have a loan. It's that easy.
Yeah, great questions coming in here, Oscar. And Andy has a couple of these deals with us right now. So thank you, Andy, for trusting us and sending us your business. A couple of questions here. What about prepayment penalty? Alina, I'll let you.
Go ahead.
Go ahead, Alina. I'll let you give Oscar a few minutes to catch his breath here.
Oscar can't take all the glory. You have a prepayment. Sorry, this is one of my favorite programs. I was kind of actually upset that Oscar got to talk about it. It's like you said, it's super easy. There is a prepayment penalty, 3 years, but your borrower has an option to either buy it down by adding a hit to the rate or by paying for it up front. And you can do down to 2 year, 1 year, or no prepay whatsoever. So you do have that option. One thing
oh, sorry, go ahead, Alina.
One of the great things about this program is that you can close in the LLC as long as LLC is created for investment purposes. Keep in mind is that whoever's on the LLC has to go on the loan, and we will allow up to 2 people. And important part that I wanted to talk about, Oscar mentioned, you have to have a primary current mortgage to qualify. There is a little bit of a gray line. You have a lot of people that live in bigger places like, a city like New York, where it's typical to rent, not to own. And they might have other investment properties. They might not even have another investment property. Again, gray line. If it's a strong borrower, we will look at it. And 9 times out of 10, we will give you that exception. So never turn a deal away just because somebody doesn't have a primary. Show me that they have mortgage history with other investment properties, or again, they live in a state where it's just typical to rent, not to own.
Yeah, and Alina, you bring up a great point. Don't just say no. Call your accounting executive. You can tell that Alina and Oscar both know their stuff. They close a lot of deals every month. They probably have seen every scenario, and they'll be able to work with you and your borrower to how to structure deals. So I can't stress. We have expert AEs all over the country that can help you. And I'm telling you, they will get these deals done for you. So great question. So what about a borrower? I've got a question here from one of our audience about, borrower purchases a house with cash, rehabs it. Give us a little bit of the seasoning for being able to either do a cash out or do a refinance and being able to use the appraised value.
Well, you could do this as a delayed. Okay, go ahead.
Sorry, go ahead, Oscar.
Cash out's 12-month seasoning. Okay, and then anything below 12 months, we'll go with the lesser of the appraised value or the purchase price.
Right. And again, I know Oscar mentioned this. Interest only. A lot of your self-employed borrowers, are all about cash flow. Well, a lot of your investors are also about cash flow. So that 40-year interest only is a real key in this program for cash flow. So think about that. I know we had a call, Oscar, you brought up, this is not for the fix and flip. Maybe talk about some of those, hard money lenders and how, this program can help build a relationship with them and take some of those loans off their books. So if you don't mind expanding on that.
I don't at all. That's actually something that I love talking about. I normally ask, do you want to learn how you can get multiple loans from one borrower and where to go get them? You definitely want to partner with hard money lenders. A scenario, someone that used this advice, they came back with 10 loans from one borrower. The hard money lender said, you know what? I've got paper on the streets. I'd like to recover. Here's someone whose notes are about to come due. And so it happened to be a borrower that had about 10 properties across the country. That loan officer happened to be licensed in almost all those states. They had 10 loans in one shot. They were rate and term refinances. Our limit is 5 for maximum exposure to one customer. But if they're good deals like we've been talking about, we definitely make exceptions.
Yeah, again, another great point, Oscar. And Alina brought it up. These files are manually underwritten, and Alina and Oscar and every AE in our company has very strong relationships. No one is going to produce a pre-qual to you without already having an approval. So again, from calculating the income from a bank statement standpoint, or maybe there is something different on their credit report. but we're not going to produce a prequal unless we already know that that's a file we're going to underwrite and close. So that's the key. Again, building that relationship with your account executive. So there was a question from George. I know we answered it, but can we do cash outs on owner occupied here in Texas? And that's where I'm located, actually in Dallas. And yes, we can do owner occupied cash out here in Texas. So we've seen a lot of places in the Southern Belt have seen a great appreciation over the last 2 to 3 years. Yeah, it might be a time to access that equity that some people have in their homes. So yes, Texas cash outs are acceptable. So and again, contact me or your local account executive and we'll help you out on that. So it's about 45 minutes past the hour. I know we've still got a lot of great questions coming in. We're going to show you how to access our website. So Oscar, do you want to just briefly touch on our asset qualifier, and then we'll talk about the website and some of the great tools that we have?
Sure. So we just finished talking about a no income, no employment doc loan for investment properties. Our asset qualifier program is the opposite side of that. It's for owner occupied properties. What we look at when it comes to our asset qualifier program, well, we make it just as easy as the investor cash flow program. We have a full calculator that we can use to come up with the math to see whether or not they qualify. What we're going to collect, the program's meant for borrowers with significant assets. They need at least $500,000 in post-closing assets, and something that's actually gotten better since is that we used to require 12 months. That assets have been seasoned for 12 months. Now we just need them seasoned for 6 months only. So those are the two key things that you want to look at when you're looking at one of these deals. The last thing is, I mean, we're gonna be looking at the loan amount, the down payment, the closing costs, 60 months of monthly debt that's reporting on credit, any taxes and insurance on any property that they may already own. And like I said, we have a full calculator that does the math for you. It even has baked in what percentage we may take from stocks, retirement accounts. It's super simple.
Yeah. And again, I think the message you're getting here today from Alina and Oscar is work with us. I mean, we've got, again, great AEs who have knowledge that, they close a lot of loans every month, and they probably have seen almost every scenario you can think of. So really, really work closely with your account executive. I promise you, they will help you make money and solidify a lot of relationships out there. So, definitely reach out. Oscar, Alina, anything to add regarding asset qualifier?
Honestly, Oscar covered it all.
Yeah, a couple of examples that were brought up on a couple of webinars we've done in the last 3 or 4 months. Examples of people who might use this. Someone maybe who sold a big business and they're just looking to purchase another home, or maybe unfortunately someone just got out of a divorce and got their settlement. So think about that. So one thing, again, Oscar mentioned it. It used to be 12-month season. It's only 6 months. That's why you need to continue. If you're not already signed up for our weekly emails, we usually shout out something regarding programs, or, again, come back, visit the website, keep in touch with your AE, because things are changing. Like I said, 21 changes since May 1st. So, and I think rumor has it there could be some changes coming again tomorrow. So stay tuned.
By the way, I did want to mention, I mean, we're not going to be collecting, I know that we mentioned 6 months of seasoning for the assets, but we're not going to be collecting 6 months from every account. It'll be the most recent statement, and then it'll be the statement from the same account 6 months back. That's what we're going to be looking at. So again, all our loans, all these programs, I mean, they're just so easy.
Moses, thanks for the shout out. So guys, we're basically finished going into the products. Again, there are probably 100 questions maybe that did not get answered. So we apologize. We will get those answered. We have some people working behind the scenes answering those questions while the webinar is going on. If not, we will get those answered by no later than end of day tomorrow. And that will be via your local account executive. So You guys, Alina, Oscar, you guys are doing a great job. Oscar, let's talk about one of our fantastic tools here that we have access to, and everyone on this call has access to this tool today. Oh, there you go.
All right. So this is the non-QM quick quote. Like John said, you don't need login credentials to get pricing. So you can do this on your computer. You can do it on the go. You can do it at an open house. Actually, I wanted to price out a scenario that I just got recently, if you don't mind, John. It was a 1.9 million bank statement loan.
Okay.
Borrower has a 760 and above. The LTV is right there with our average of 75%. And guys, what you want to make sure to do here is you always want to make sure to go to income documentation and choose the documentation that covers your program. So in this case, it's 24 months of bank statements. So there we have a rate. And I mean, look how easy that was. Something else I wanted to price out, just to show everyone how interactive this is. We can price out a cash out really quickly here. So we'll take the transaction type and we'll switch it to cash out. And then let's do 65 LTV.
65.
And I'm curious to see what this is like because
Yeah.
Can you read that? I can't see it.
Yeah, that's a less than a 4% rate. Yep.
Wow.
So, and some of the other things, and Oscar, I don't know if you could say this, but I could take a little bit from here. As you mentioned, you know, as Alina mentioned, as she was going through the bank statement, high levels, 48-month season, and they're going to give you some other high level overview of bank statements specifically. So 6 months reserves. Someone asked about, you know, how do we get paid? You know, well, yeah, we do have lender paid comp. So dependent upon your broker agreement with us, if you have a 2% lender paid comp, we would add 1 to the rate and price this one at a 4.875. That would be paying you back 2 points as a lender paid comp. So it's really important to know, obviously, how you're going to get compensated. So just wanted to answer another question from the audience. So this is a really easy, quick, intuitive tool to use. And then if you follow the steps, you can get us a pre-qual. So, and that's just a 1003, a credit report. And if you're going to get us those bank statements, really ask for 24. It's so much easy. We do the income calculation for you. So just, you know, let us do the work for you and let us position the deal the best way for your borrower. So we'll do that because, you know, we're also, you know, on that same pay plan that you guys are on. So we get paid when the deal closes. So we definitely want, you know, we're working on your behalf for you, your borrower, and your referral source. And we're really keenly aware of everyone involved in the transaction. So we also have, you know, one of the things we did launch during COVID because a lot of the turn times, as you all know and lived it and breathed it, it was, you know, there were 3, 4, 5 weeks turn times out there. So we did launch agency just for, you know, a lot of our brokers who were struggling with the turn times. So we do have agency, but I will tell you, we live, breathe, and die by non-QM. So just want to make sure you're all aware of that. Alina, let's take them into some of the other great tools we have, like marketing pieces. And a lot of you have stayed on the call here, and this is what I was saying in the beginning. This is really where we're going to hold your hand and partner with you. Oh, no, this might be. Can you guys help me with this? I just got my new laptop today, and it's not pre-populated, so I apologize. So what is it? Awesome.
I know it's awesomea@angelopenup.com, but I'm not sure of the password.
I think I know it. Sorry. Oh, this would be. Is it AOMS?
Yeah.
Okay. And hold on.
John, look at your phone.
Okay. Sorry, guys. Bear with me here. Literally just got this laptop 2 seconds ago. So got it. Thank you, Stephen.
Can you see?
These are my smart glasses, Alina. Stop it.
There we go.
So, Alina, as we're logging in here, you know, and I apologize everyone for the delay there. We still have about 7 minutes left here, so I appreciate your patience. You know, go ahead, Alina. Explain to them what they're going to see when they log in. These, just so you know, you do need credentials to log in here. So we have a chat specialist here, and so you can get that that access request form from your AE or from our website. So go ahead, Alina.
So anytime you log into the portal, this is where you guys are going to be able to view your pipeline, clear conditions, order appraisal, upload new loans. So everything is kind of like a one-stop shop for you. Even on the agency side, to price out or relock your loans, you'll be able to do that as well. The main thing that I want to point out on the first page when you log in is our current turn times, which we are closing in under 30 days. So anytime anything gets updated, you can see on the main page as to what our current turn times look like. My favorite part of the portal is the marketing piece of it. I can't stress enough the importance of utilizing it, guys, especially if you want to grow your non-QM business. All the tools that are provided there is exact same information that I use to market myself, and we're offering it to you guys for free. You can customize all the flyers. It takes a couple of seconds. You can put your pretty face on it, your company logo, whatever you like, your disclaimer. Save it, and once you do only one flyer, you go to the download drop-down box, and it will automatically populate to all the other flyers. You save it, and you send it out. Done. Everything literally can be done in under probably 4 minutes. And if you have a hard time, getting that accomplished, please reach out to your AE. We will do it for you. If you're not yet approved with us, I mean, I do it for my customers that do want to market but haven't quite got yet signed up with us. I will create flyers for them. I can't speak for everybody else, but I will.
you might have thrown some of your fellow AEs, Alina, under the bus, but that's the joking aside, that's the dedication of an Oscar and Alina, that they are really here to help you grow your business. So really take advantage of it. I know Armando does it a lot here in the Dallas office for his customers. So take advantage of it. Gosh, yeah. So what else, Alina? What else?
Can I show the presentation? Oh, go ahead to social media. Yeah. So all the flyers that you guys create, this is how dummy-proof we've made it. All you have to do is copy and paste the same wherever you want. If your target audience is a realtor, you have the asset qualifier flyer, copy and paste the same for the realtor. If your customer is the borrower, copy and paste it, and then you can market it. You have it for bank statements, you asset qualifier, you have it for cash out, and so forth. So all the work, again, has been done for you. All you have to do is log in, copy and paste, and you're good to go.
Yeah, so, Thomas, you're wanting to find out who your AE is and how you can get login credentials. We will definitely get you taken care of today on that. So I promise you, I love the excitement. People are ready to grow their business. So, Alina, what else should we show them here?
We do have whiteboard videos there. We're not going to be able to play them for you, but they're under a minute long. Super, super easy. One thing I forgot to mention, that nothing on here on the marketing portal says Angel Oak. It's going to have your information only. So the whiteboard videos, they're basically talking about a scenario where a borrower would have typically been turned away, but they were able to find a solution. And again, this is great to save it, and you can post it on LinkedIn, Facebook, Instagram, whatever other social tools you guys use. Another one, can you show the presentation, John?
Yep.
We have a great, amazing, strong, powerful tool that we've created, which is a realtor presentation. You guys have local AEs with local presence. We are your partners. We're here to help you grow your business. Utilize this to the fullest, not just to create PowerPoint, not just to create flyers, but to actually be there for you. If you have a realtor presentation, we can be next to you. We can be your non-QM expert. We're not going to be the main point of contact. It's still going to be you. This is your show, your presentation. We're just simply going to be educating realtors about the non-QM market, who these borrowers are, how to find them, and how to pre-qualify them. Can you show page 4?
Go ahead, Alina. Sorry.
No, go ahead, John. Add to it.
Yeah, so one of the things that we'll do, and since COVID, I've done a few of these. So, Alina, if you've got someone who wants to do it in person with you, it's a very powerful, but we've done a lot of these via webinars just like this to your referral source. And I will tell you, this is one of the most powerful presentations you can do to your referral source. I know everyone brings people, they used to bring them into title offices, and you parade people in, you say, I got the best service, I got the best rates, I got this. This is powerful. This is telling your referral source how you can go out and grow their business, not just your business, but their business. It's extremely, extremely powerful. Go ahead, Alina, I didn't mean to.
No, it's fine. Just I wanted to point to a couple of, to me, important flyers, of slides, I'm sorry. So for those that are still afraid of the non-QM word and the non-QM borrower, just want to show you the difference when you compare it to now versus 2006. And this is great tool to also show to your realtors. In 2006, average score was 580. Now it's 680. In 2006, the down payment was there's zero skin in the game. Now we require borrowers to put in at least minimum of 10%, which is very, very, very important to show to people who are still afraid of non-QM. Can you show slide 5, please?
Anything for you.
Thank you. I want to read this to you guys. Close just 3 more deals a year using portfolio products, and you can increase your commission by $54,000. That's an extremely powerful statement. Extremely powerful. I guarantee you, when you read the statement to your realtors, their wheels will start turning, and they're going to start thinking in the back of their head what files and what customers they've turned away and how they can get them back.
Yeah, and during this presentation, I just put up a slide here that shows you how you can really grow this business, and Oscar alluded it to when he was talking about platinum. You know, revisit any turn downs that you might have had over the last 60 to 90 days. Why not, right? I know you all have been really successful this year, and you might want to say, maybe not. There's a referral source at risk. I promise you, builders, developers. And remember, the Mortgage Bankers Association is saying refis are projected to be down 46%. So when you look at your 1099 or your W-2, that's in jeopardy. So accountants, CPAs, Oscar mentioned CPAs or financial planners. You know, that platinum program, that's a great program to go to a financial planner. Maybe instead of most jumbos requiring 20% down, we're only going to require 10% down. And what financial planner doesn't want that borrower to leave that extra 10% in their assets? So bankruptcy attorneys, we've got that Portfolio Select program that allows for 2-year season on bankruptcies, or even divorce attorneys, because usually if there's a dissolution of a marriage or a partnership, you know, you're going to probably have some banged up credit. And then social media. Alina, articulated all the posts that we have on there. Use them. Grow your business. So, I know we're a couple minutes past the hour. I did want to just say thank you. Thank you to everyone who joined us. We really appreciate you. We will get your questions answered. This is recorded. You know, we will get you in touch with your local or inside sales account executive. Alina and Oscar, you guys, you killed it. You guys are, and that's why you are so successful in this business. Anything, Oscar, you want to say?
I do. I mean, like I said, my mind was boggled by the numbers that we saw in those polls. You added earlier in the presentation that the Mortgage Bankers Association said that refis were going to drop by an amount. What was it? Was it more than 50%?
46%. 46%.
We've got over 50 million people projected to be self-employed this year. That's another stat that you gave. So it's really a matter of what slice of the pie do you want this year, and how quickly do you want to scale your business. I encourage everybody, once we get off of this call, I've been getting a lot of calls, especially to schedule more of these types of webinars. Call your AE. Call your AE right away. Schedule a webinar with your entire team, whether it's just or you could be a one-man or woman shop. Schedule a call. I say in 15 minutes you can become an expert on any program.
All right. And Alina?
Yeah, thank you guys so much for getting on the call. I hope this shed a little bit of more light on how easy these programs and these products are. And guys, you're doing a disservice not only to your customer, but to yourself by not offering them. We are now getting more calls from actual borrowers educating themselves on the non-QM products to see where they fit in themselves. So if you're turning these people away, your competitor down the street is going to get them. That's just money walking away from you.
Yeah, so thank you again, everyone. We wish you all a safe and successful 2021. Alina, great job. I love you. I'll see you next week. Oscar, great job. I love you, and I'll see you next week, buddy. So I appreciate it, everyone. Thank you so much.
Thank you, guys. Bye.
Thanks, guys. Thanks for joining.